Okay, so video number one, as I promised. So here I'm going to talk about a will-based estate plan, which is different to a trust-based estate plan. And then I'm going to talk about no estate plan, no will, no estate planning. Okay. Now, in this video, I said I'm going to cover number one, but I'm probably going to cover number one and number two because number two doesn't require its own video. All right, so let me get started. Often I meet people and they think unless they're very, very wealthy or ultra high net worth, that they don't need a will, but everyone needs a will. And I want to clarify a few things. So first, just so you understand, a will is revocable and amendable. So as long as you are alive, you can change it either completely or just make revisions or edits. And a will only goes into action at your passing. Okay. So here are some examples of no will and why they were detrimental to people who thought they didn't need them. A great example, unfortunately, was an older gentleman I knew who passed away and thought that they didn't have any assets. So they didn't really need a will because by this time they had sold their own home and had already gifted one home to a kid years before and really didn't have a lot of assets that they hadn't already given away. Okay, well, unfortunately, once they passed, their kids were notified that a long lost family member that he never knew was even alive still left a lot of money to him, which obviously he was gone. So by default, that money gets split between his heirs. There was one daughter, he had three daughters. There was one daughter who hadn't visited the family or the dad or spoken to them in over 30 years. And things didn't end well 30 years ago amicably. So she will now receive 1/3 of a substantial amount of money. And all the kids, including her, knew that had dad written a will, he would have excluded her from that planning. Nothing we could do. He had already passed away. Okay, another great example. I had a client who was older when they'd finally become a client of ours and met us and all that. And he decided he didn't need to do any estate planning. His life was simple. He was married to one woman. They had all their kids together. There was no kids from previous marriage. And he knew that she would get all his assets. He wouldn't even talk to me about it. So I stopped discussing it. Well, the way his passing actually happened in the state with which he resided is that the assets that were in his name only went partially to his wife and then to his children equally. Now, some of his kids were already married, so they had spouses, and his wife needed some of that money. But those children had spouses who did not want to give their portion back. So the spouses didn't want to give the money to the wife who actually needed some of those assets to live on. Okay, another sad example. A lady contacted us. She had been recently widowed and she was becoming a new client of ours. And she kept asking me, and she was very confused. Why was it that she was being told by the company that held her husband's retirement account that she had to go through probate? And I said, I really don't know, because as you and I both know, retirement accounts and IRAs bypass probate. So when we actually pulled the paperwork for her, unfortunately, her husband had written on his plan paperwork for his $700,000 IRA the estate of his name as his beneficiary. And I asked her about this, and she told me, oh, yeah, he told me he would rather do all of his planning himself than pay some attorney $1,000 to do 20 minutes of simple paperwork. Well, in her state, unfortunately, probate cost her $35,000 because he didn't want to spend $1,000 to pay an attorney to do some simple paperwork. And obviously, it's such a shame in these cases because we couldn't do anything, right? The husband has passed away, at which point it's too late to do anything. Okay. So when it comes to a will, it's not better to do nothing than to do something. Even a simple will can prevent a lot of what I get to see every day that's horrible for the person that's remaining. Okay. Now, wills can be a great estate planning tool when used properly. But in some cases, I see people go through actually doing a will and then the will's not done properly. Now, I'm going to pick for 2 seconds on people whose cousin or friend or brother-in-law or father-in-law is an attorney so they can draw up your estate planning documents. I cannot overstate the value of having a professional who does estate planning as a specialty. That is the specific line of law that they are trained in. That person has to stay up to date on all the different IRA laws and rules and changes and all the other estate planning rules. There are so many things, and they are very specific to the state in which you live. You don't want a general practitioner doing specialized work. I can't overstate that. Okay, Now, in some cases, one of the, if not two of the examples I'm about to give you of clients who did have a will done, but it was done incorrectly, was done by an estate planning attorney. So I can't speak to why that was. These are new, some of them. So I want to share them because they're really important. So one I saw recently, the will designated a beneficiary that conflicted with the beneficiaries named on that person's individual retirement accounts. I've never actually seen an estate planning attorney put beneficiaries on a will for retirement accounts because retirement accounts don't go through the will. They go directly to beneficiaries. Okay. So retirement accounts and insurance policies have their own beneficiary forms. All right, another good example. I saw a will that named beneficiaries on items that were owned by the client's LLC. So this client had multiple rental properties and they had an LLC that owned and managed and ran those rental properties. So in their will, they can't give those properties out. They could have given maybe an interest in the LLC to the beneficiaries, or maybe they needed to create separate LLCs so each beneficiary could have those assets. But it literally was a useless document because you can't do that. It needed to be incorporated properly. I found several beneficiaries listed in a client's will that literally conflicted. This was recent with their life insurance, their retirement accounts, and I think they had some annuity contracts or some other insurance contracts. The beneficiary forms on all insurance contracts and all retirement accounts are overriding forms. Your will doesn't. So these poor people think that they're updating their estate planning by updating their will, but their retirement accounts and their insurance products have to be done on those companies' paperwork. Okay, so these are things that have to be addressed while you're still alive. And even more important, while you're still competent, because I had a lady that I spoke to, couldn't have been more than 2 weeks ago, maybe it was 3 weeks ago. And she said to me, Lisa, I really want to make sure, my mom's starting to get frail. I want to review her planning. And I said, okay. Did you talk to her estate planning attorney? I don't really like her estate planning attorney. And I said, okay, how old's your mom? 86. Your mother at 86 is not going to change her estate planning. And if she does, it's going to be a rare scenario. Really, people over 85 in most cases, sometimes 80, don't want to update their estate planning. And sometimes they're not making good decisions at that point. So the one thing I want to tell anybody watching this video is you really should be reviewing your beneficiaries on all of your assets at least every 5 years, maybe more often if there's a change, if one of your kids gets married, or if you want to change your beneficiaries for whatever reason, but minimally every 5 years. Okay, I want to cover point number 2 in this video because it's short, but it is extremely crucial. An unfunded revocable living trust. Unfunded trusts can lead to as many problems, if not more, than a poorly written will, because assets that are in that trust 99% of the time require more attention and detail and handling that have to be done during that estate planning process. Things like real estate, intellectual property, certain types of stocks, partnerships, business partnerships, promissory notes. Proper funding is crucial to even having a living trust. If you want the plan to work when it's needed the most, you have to do it right when you're creating it. Okay. So I know I covered a lot and I get a little bit on my soapbox. My job is to help you and give you some things to think about or some things to talk about. And hopefully this was informational. If you have any questions, please feel free to reach out to us.